And 1 contract a month is what we want you to try to focus on to be able to do. So right now I am up to 3 contracts. So I'm going to trade with 3 contracts until I get my goal. And then I'm going to bump it back down. That one. And then I'm going to bump it back down to 1 contract. Okay. So here we go. The markets have just opened up. And I know that we don't have any news right now for a little while. So we're just going to trade what's in front of us and see what happens. All right. Right now, the long-term direction is bullish here on the NQ. On the NQ, I'm on a 16-tick range. I have a 20-tick stop. Okay. There is a bullish arrow right there. Now that is a trade you could take right there if you wanted to. I didn't. I'm explaining it to you more than anything else. But if you did take it right here at the open, it's already gone about 20 ticks into profit. Over here, we don't have anything going on with the gold. We don't have anything going on with the crude. We don't have anything yet with the ES. Okay. All right, yeah. So I'm just waiting for another opportunity here on the NQ. The long-term direction is bullish. Long-term direction is this outer band right here. Okay, these 2 outer bands, if they're separated in blue, then the long and short-term direction are both up. If they're separated in white, then just one of them is up. If they happen to be, there's another trade here on the NQ. If they happen to be separated and I can explain the red arrow too in a minute here. If they happen to be separated, I mean, if they're not separated, that means you don't have any trend. Like when it gets flat. Okay, sorry, let me show you. I'm trying to show you that. Like right in here, you don't have any trend when it gets flat. Your long-term trend is flat. So you want to be careful trading when the long-term trend is just not there. Okay. When you get the red arrows, that means that both the UC and the lead line are in the either the oversold or overbought area. All right, now here it goes with the NQ. All right, so we're in at 475. That's 4 points right there. Okay, and it just took me out with my 4 points. I think it actually took me out. Well, here it's exactly 300. So it was 20 ticks is what it gave me. So that's the goal for the day. Actually, right there is the goal for the day. What the red arrow means, typically what the red arrow means is that you have more room to run, all right? Because it's starting from down here in the oversold or the overbought area, depending on what direction you're going, and it runs up to the overbought or oversold area. It goes from end to end. Now, with the slingshot that a lot of you who have been around for a while, you might be used to the other slingshot. This is the ultimate slingshot. This is faster than that one, but that one has a green line. It's very similar to this one. This is just a little faster than that green line. It's a little more sensitive. It does the same thing though. When you're using it for management of the trade, it should go from oversold to overbought, from overbought to oversold, from oversold back to overbought. So as far as trade management goes, it does the same thing. Okay. So here, now, oops. The way I'm going to mark the trades, if you guys, I mean, a lot of you have been here in the past. I don't do it right on the chart like that. I just do it with either blue arrow, a red arrow, or yellow arrow. Yellow is a break even, a blue or a red obviously is a profitable trade or not profitable trade. Over here on the gold right now, you see this is starting to pull back. The long-term direction is bullish and it's starting to pull back. So that's it. No, I'm the only one that has red arrows right now, Wayne. Okay, so we're gonna get an arrow here. If we get a down close, we're gonna get an arrow right here. If it pulls the white out of the overbought, like that right there. Okay. Now that is, you got to bump the stop to break even after he takes in profit. So bumping it to +4. Okay, it just took me out with +4. You're gonna get another arrow here. If it pulls it out right there, that's another arrow. Now I don't think that the NQ right here wants to go down just yet. Okay, I think right now it's pretty much done going down. One of the things that you're gonna note is if you get a trade and it does not put in a lower swing or a higher swing, does not continue the trend for you, you might want to skip the next one after that. Just wait until it continues the trend. Okay, so this one right here, if you took the trade, you're in it still. This one right here, I took 4 ticks on. Okay, so I took the 4 ticks right here, and if you took that one, then you're still in it. Okay, well, let me write this down. Hang on. So how many minutes did that first trade take? We'll say 2 minutes.
Good morning.
Good morning, Dwayne. And okay. All right. So now we have a long-term direction. It's starting to get bearish right here. It's bullish over here on the gold, so we need an up close here on the gold. Now this is going a little bit slower than the NQ. So add 8 ticks to that. 19.4 plus 8 is going to bring you up to 20.2. Crap, I still have 3 contracts on. Let me move that down to 1. I've gotten the goal for the day, so I'm just going to bump down to 1 contract now. Okay, and here comes another one on the NQ. Hang on. Let me bump this. All right, I just bumped everything down. Okay, so the NQ needs to pull it out of the, like that right there. It needs to pull it out of the oversold, overbought. And that is, I don't know how many that is. Okay. Oops. And I'm short 2 now. So let me just update that. Okay. I don't know how much I got out of that. Let me see. Hang on. I got to think about it. 360 minus. Okay. Hang on. Let me write this down.
Did you turn on the TradingView stream?
Oh, no, I didn't. Crap. Let me turn that on. I totally forgot about that. Okay, let me go and do that. Thanks. Thanks for reminding me. Entire screen. Let's hit that. Share and start stream. Okay. It's not started yet. It's starting up. There it goes. Okay, now we have the TradingView stream is live. Okay, and we triggered it over here on the gold. I'm pretty sure my stop should go to break even on the gold here. All right, for those of you guys that are coming on the TradingView, sorry about that slow start of the TradingView stream. There, okay, but it is now running. All right, currency, let me undo that. Okay. So I took some profit over here again on that one on the NQ. You see the NQ is really fast, so it's hard for me to keep up with it. And the gold over here, I just ended up with a break even on this. So that is like that. All right. Gold. All right, on the NQ, another down close right here. If it drags the lead line out of the oversold, it's going to give us an arrow, right? This right here and this right here were both valid trades just off the ribbon. Okay, they were both valid trades just off the ribbon. Here's the NQ again. Hold on. Hang on, here it is. I'm trying to bring it over and throw my stop and break even at the same time. Okay, plus 8 is where I dropped that one at. Okay. And so how many trades do I have on the NQ right now? Let me just draw that in again. All right, it's showing another trade right there. I'm not in this one, but it's showing another trade right there. The NQ should have put in a lower swing on that last one right here. Should have put in a lower swing, but it didn't. I remember me saying that. Okay, if you want to set up a mentoring session, that is good. I have a whole bunch of them set up, but let me just put you down. Okay, I'll add you onto the list. Okay. All right, so the crude oil, I'm inside the ES right now. I have bearish separation right here. Okay, bearish separation right here. I didn't write down that last trade. Yeah, I did. Okay, I did. We have bearish separation. We need to pull back up to test the ribbon. Okay, over here on the gold. This was just another trade right here on the gold. I ended up taking a break even on this pullback. This one here is another trade. It didn't give you an arrow, but it's still a valid trade because it pulled back and it hit the ribbon. And the long-term direction is bullish. That's all you really need. If the long-term direction is bullish, the black line is in the green, any touch of the ribbon, any up close off the ribbon is a trade. Okay. You don't have to have an arrow. The arrow just adds to it. If the NQ initial stop is 20 ticks, when you move stop to break even, I move stop to break even after 8 ticks in profit. All right, I'm going to show you guys this again. If you go here to mytradingiq.com, trade rules. All right, just these are the rules for the trades. These are the settings. Watch this setup video. If you watch that setup video, mytradingiq.com, trade rules. These are the settings for the context, TIQ context, sensitivity within it, and that explains everything. It's got all the initial stops. It's got here. I'm sorry, gold. It's got all the initial stops. It's got, we haven't hit the spot to move the stop to break even yet. But it's got all the initial stops. There it goes. Okay, now stop to break even on this, and now that should go up to 22.0. All right, I'll draw that in for you right now. Should go up to here, right here. Oops, 22.0. What the heck? How did that not be in that color? Okay, 22.0. I'm gonna bring that DOM back up. I just lost that DOM in the background. There it is. Okay. So my stop is at break even on this. I'm actually gonna lock in 2 ticks on this. And it should go up here to 22.0. I'm gonna throw a target there. If it gets there, that would be 25. That'd be 15 ticks if it gets there. I'm gonna lock in 3 now. It'll be 15 ticks. I'm gonna get 5 or 3, or I'm gonna get 15. Right? Because I'm gonna focus back over here. This right here gave us an arrow. I didn't do this trade. It's still something you could do if you wanted to. I guess I still can. I'm gonna do it right now. Okay, I just threw the NQ trade on, and it looks like I'm gonna stop out on it, but not yet. It's gotta go 8 ticks in profit to throw the stop at break even. So it's got to hit up here at 82.50. Throw that stop at break even. Okay, I think it just hit it. Bouncing around so much, it's hard to tell. Once Powell starts talking, I'm going to just put the NQ off. Okay, so I stopped out on that one. Oops. Okay, once Powell starts talking, I am going to probably put the NQ down because it's going to be too crazy to try to trade. Okay, so this over here was a long trade that I just took that did not work out. That is a red one. Okay, so the gold is still trying to work its way up to that number that I gave you, and it hasn't gotten there yet, but I've locked in 5 ticks now, so we get 5 or 15 there. There's a trade here on the ES. This was not a trade here. I don't know why we didn't get an arrow triggered on that one. We should have, but this, it hit the ribbon, gave a down close, and the black is in the red. So that is a valid trade there on the ES as well. Okay, so here, bring that over and show it to you. Here it is, and still nothing on crude oil. Crude has been a mess since yesterday. It's been really messy. But we'll just trade what's in front of us. Okay, good morning, Ray. Okay, so we're gonna lock in 3 more ticks here. So we have 8. We're gonna get 8 or 15, and we just got the 15 total there on that. Okay, was that? Should that have been 15 on the gold? Was I counting that right? I think I did. 0.7. No, it wasn't 15. Was it? I think it was 13. 13 ticks. Okay. So that's another blue one from right there. Okay. All right. The ES. What happened to the ES trade? Did I stop out on that? Should I move the stop to break even? What happened with that one? Where is it? Here it is. I think I stopped out. Didn't I? Yeah, I think I did. Yes, I did. In fact, stop out on that. Okay, so I stopped out on the ES trade. There was a follow-up trade. No, there wasn't. It was right here was the trade, was the actual trade. And I got to check the ES and see if I have this set right, because seems to me I don't. It seems to me like it should have been printing a couple of ribbons right there. Okay, arrows is what I mean. I should have printed an arrow on that one. I had it set to 0.75 when I was looking at the YM yesterday during a meeting. That's why I didn't get the arrow there. So you should have been short right there. I went short right here on the second entry. So it should have put in a lower swing from the first one. And I probably should have had my stop at break even, but I messed that up. So I am minus 10 ticks right here on this one. Okay. This was a good trade. That, not so much. It is setting up again for another trade here, though. It didn't really put in a lower swing, but I guess it did put in just one tick lower. The gold's got another trade here that I missed right here. That was a nice trade on gold. Okay, yes, stopped out on the ES ray. We did. All right. So the gold, I don't know if any of you guys got this gold. The next level up on the gold that it's searching for, 23.0, that's right up above, but 23.5. 23.5 is what it's really looking for right now. It's right here. Okay, 23.5. And again, I'm not sure what's going on with the ES. Okay. Let me just check that setting again and make sure that that is set to 0.35. Okay, it is. That is the default setting. Is 0.35 is the default setting. The ES and the NQ both use that setting. Okay. Good morning, Ray. The NQ, I answered that question. Polo, I have you down on the list. We'll talk about it in a little while. Okay. About getting you a meeting set up. Again, for everybody who is in here who everybody who's in here who has been here before, or who is an active partner, or anybody who's using the TIQ context. Okay, if you go here to mytradingview.com and you click right here on trade rules, these are the rules for the trades, and this is the setup video. Okay, the risk management, the trade exit, the entry, all the things you need to know about it. Watch the video. Okay, the video's got a lot of information in it. All right. Here we go. So the gold is continuing its move up. Man, I wish I would have gotten that one. That was a really nice trade. That perfect trigger right there. So those of you guys, there's a bunch of people in here that are seeing all these arrows and stuff for the first time. If you're in here for the first time, you're seeing the arrows for the first time. They are placed on there. These that are within the price are placed on there automatically. These on the outside are my actual trades that I'm putting on there. Okay, like that was placed automatically. All these are placed automatically. The little arrows that lead up to the big arrow, they are telling you, they're giving you a heads up. They're saying, pay attention. The next mark could be the trade setup. The next mark could be the trade setup. Okay, that's what they're telling you. Like right here, you don't see any little arrows right here. That's because the long-term direction is flattening out. Okay, you don't see any little arrows right here because the long-term direction is flattening out. Okay. Yeah, probably, Scott. Anyway, let me just check the setting on this one too, because I had it messed up on that other one. I just want to make sure I don't have it messed up on this one. This is 0.35. Okay, that is correct. And this should be, I'm not getting any arrows here, but I shouldn't be getting any arrows here either. This should be 0.01. Okay, this should be 0.05. The thing that I'm checking here is the sensitivity. Okay, the sensitivity down here. That's an input sensitivity. Okay, to turn the arrows on, you go to style, and it's right here. These are the momentum arrows. This is the bigger arrow, and these are the smaller arrows that lead up to the bigger arrow. This is the no trade zone. If you click the no trade zone, then it highlights an area where, you know, if the trend is flattened out, we probably don't want to trade. The sensitivity, the no trade zone is set by the sensitivity. These two things right here are set by the sensitivity. Okay. Now you see everything's flattened out over here. No more arrows. Same thing on both of those. And now as it pulls back over here on both of these, hopefully we're going to get something else. The long-term direction is clearly bullish right here, and it's bullish right here. So, Jason. This is something that, yes, they haven't seen yet. If you haven't been here yet this year, Jason, then this is something you haven't seen. The arrows are the really new thing. But if you use the context, and the context gives you the context of the market, the current short-term trend is what it's showing you, the short-term trend and the long-term trend. That's what the context is for. You know, the thing, when we were using everything else in the past, you had to figure that out on your own. You had to go back and look and see what the short-term trend was as opposed to the long-term trend. So you had to figure out the long-term trend, the short-term trend, decide what direction you're going to trade in, if you're going to trade with both, if you're going to trade with either one. All that is done for you here with the colors. The dark color that you see in here, that's the short-term trend. The light color is the long-term trend. If they're both going in the same direction, these outer bands, if they're both up or bullish, the outer band is going to be blue. If they're both down or bearish, the outer band is going to be red. The outer band is your long-term trend. But if both long and short-term or bearish, it's going to be red. If they're not the same, it's going to be white. Right? If it's flat like this, you just want to stay away and don't trade. Okay, see, flat like this, flat like that, just don't trade. You're not going to get any arrows when it's like that. Okay, now right now, the gold is giving you a continuation trade, or like a momentum trade, is basically what I refer to it as over here. Now the reason it's doing this is because down here, your lead line, the white line here, your lead line is oversold, and it's crossed out of oversold while you still have a long-term bullish trend. That's why it's doing that. Okay, so it's triggered by two things. Your long-term trend, well, it's triggered by a couple of things, but one is the long-term trend, and one is coming out of the oversold. Okay, if it agrees with the trend, then it's going to give you an arrow. You see this one's chopping around a little bit right here because it went out of the long-term trend, went back in, and went out of the oversold, went back in it, came back out, and right now it looks like it's probably going to come. Came out, went in, came out, went in, and right here, that's what the little arrow says right here. The little arrow says the long-term trend is up, but it's oversold. Okay. Your summary, yeah, that's a great summary, Scott. Probably captured it all right there in a nutshell. And he's going to take probably a half hour to say the same thing. You just get up there and say, okay, everything I said yesterday, just think the exact opposite. Did create some good volatility yesterday, though. And you know, that's what we like. All right. So the gold is pulling back down to get into the ribbon right here. Now it's getting into the ribbon, and the black line is in the green. So even if we don't get an arrow on an up close here, that will still be a valid trade. Okay. The long-term direction is bullish. The black is in the green. Any touch of the ribbon, any bounce off the ribbon is a valid trade. Right? There are going to be times where the arrow doesn't print where you still get valid trades. Okay. So, good morning, Randy. So understanding why you have these trades, like an up close right here, the arrow is, if it doesn't print down here, it's going to be because this stays oversold on an up close, but that's still be a valid trade right here. 23.8, add 8 to that. 24.6 is what I'll be buying right now. Right, so I put my buy stop limit order on right now, 24.6. And we'll see if we get filled. Okay. All right. All right, so we need the up close here on the gold right now. 23.8 up to 24.6. This bar is, they're all 7-tick range bars. So this has got all 7 ticks range in the bar now. It's either going to close down here or it's going to close up right here. And if it closes up, it's going to trigger me in. And it did close up, and it should have just triggered me in, and it did, and it slipped me a tick. But I'm in the trade. Okay. So that is a valid trade, and it did actually print an arrow too. So the lead line came out of the oversold and printed the arrow for me. And where should this go? Well, looking left, it should go up here to 25.8. Looking at the DOM, DOM is not showing me that much yet, but the DOM is showing me up at 25.4. Looks pretty good. So that's enough to get the stop to break even. Now, looking at the pullback numbers, 23.8 is a good pullback number. 23.6 is a good pullback number. So there's a good chance I'm going to get stopped out on this. Yeah, there is, but you know, there's a good chance that I'm actually going to make money on it too. So I'm in it for the odds right here, and you know what we're doing here is like we're repeating patterns that have happened in the past, right? So usually when price comes down and hits the ribbon like this, you're going to get a bounce off the ribbon. When the black is in the green, this is oversold. You're going to get a bounce off the ribbon, and it's going to move up, and it's going to move up at least to the prior swing high, which is 25.8, and probably through that. Okay, now the way that gold typically works, for those of you guys who don't know, I'll put it right here on the ES because that's not giving us anything. The way that gold typically works is now it'll do nothing for a while, and then it'll have a big run, and then it'll do nothing for a while, and then leg lengths was one of the things in my lesson plan for today. I'll show you the lesson plan in a few minutes, but the lesson plan doesn't begin until 10:15. Okay, but typically gold will work well with the leg lengths, you know, and so once it consolidates, it'll have another leg length, and the leg length right now is from right here. This is the initial leg length, and I'd be happy with that if we did that. Okay, so that would be up to there, but I think it's actually going to try to do more than that if it does continue with the leg length, my leg length theory. Now it's got to go 4 ticks into profit to bump the stop to break even. I think it already hit the 4th tick there. Now it did. Okay, so the stop is at break even, so I'm not going to worry about losing any money on this trade. It's just a matter of how much I make now. Okay, so you see everything is starting to open up here now. Stop to close 4, 5, and I'm in at 26.7. I said 25.8 is what I said, right? So that's 7 ticks right there. Did I draw that in? I drew this one down here. Okay, I didn't draw in 25.8. 26.2 would be good too. It's already hit the 26.2. But anyway, a little bit more gold. Okay, and the leg length that I gave to you. Right, that's part of today's lesson plan. Let me show you the lesson plan for today. Okay, the lesson plan doesn't actually begin until 10:15. There was a trade in here. I'm sorry, a trade in here on the crude that I totally missed. A trade over here on the NQ that I missed. If anybody wants to, yeah, that's what we're waiting for, John. If anybody wants to see any equities, you want to see anything on any equities, you just got to give me this symbol, and I'll show you the stuff on equities too, or ETFs if you want to look at ETFs. I'm happy to do either one. Let me put this down. This was another profitable trade. Oops, it's not a red one. That is a blue one. Okay. This was a nice trade right here on the crude oil. If anybody got that, I didn't. And the NQ is starting to pull back. It is now 9:59. We do have, I think we have something coming up at 10 o'clock. We do have crude inventories coming up at 10:30 too. You can't remember that. Okay, on crude, that last trade, it had an arrow, but it didn't touch the ribbon. That is correct. It did not touch the ribbon. You get the arrows. The arrows happen whether it touches a ribbon or not. All right. The arrows are looking at the long-term trend, and they're looking at a couple of things, but the long-term trend, and they want to see it coming out of the oversold area down here, right, for the arrow to happen. It's a continuation. It's got to come out of the oversold. It's got to cross the UC line. So it's got to come out of oversold and cross the UC line. And the long-term trend has to be in favor of the trade. Okay, that's what you're looking for with that. Now, 10 o'clock just happened, and I don't remember if we had news at 10 o'clock or not. I think we might have, but you can see the NQs reacted a little bit here. And I just shorted the NQ. Hang on, I'll bring it over and show it to you. I shorted the NQ at 51.75, and I'm going to throw right there from 51 down to 36. That's 10 points right there. Oh, 51 down to 31. That's 20 points right there. Okay, so that was 20 points on that. Okay, and that was right here. Somewhere in here is where I shorted that. Yeah, I was trying to get it from up here. Maybe I got that much slippage, but it's possible. And those were points, not ticks. And it just gave another one. I missed that while I was looking down, but it just gave another short right here. The ES gave a short right there at the same time that the NQ did a minute ago. I missed that too. The gold gave a short right here at the same time. I missed that too. Joel's job openings. Is that what it was, Jay? Thanks. And yeah, and Powell's about to speak. So you're going to see a lot of action happen here. So again, the key takeaway from all this is we got the goal for the day on the first trade. So you shouldn't have to keep trading and putting yourself at risk. Okay. But obviously, if you do keep trading, there are more opportunities that are going to be coming. And right now, well, we just took that last trade. I put the arrow on that trade, right? I only took one of those trades through there. I didn't take this one. I didn't take this one. And I didn't take any of these follow-up trades here. That one, or that one, or that one, or that one.
On the Joel side, job openings, the actual was 10.8 million. They were expecting 10.5 million.
Okay,
so
that's not huge. It's not a huge miss.
Not a huge miss, no.
But I think now Powell's supposed to be speaking too.
But Powell will find that as ammunition.
Yeah, I'm sure he's got some sort of rhetoric one way or the other, so he's ready for it. If he didn't know the news already, I'm sure he was ready for it. I'm sure he probably knew the news already anyway. Okay, so what I said about this when it gets to 10 o'clock, I was going to shut the NQ off. I'm still going to do that, right? Now, if some of you guys want to watch the NQ, you're just going to tell me and I'll turn it back on. But it's a little bit crazy to try to do that and do everything else. So we can just do it with 3 markets right here, just fine. The NQ is fun, but it's stressful. I used to always say if you're going to trade the NQ, you might want to just only trade the NQ and not do anything else and really focus on the NQ. And I still think that's a thing. And I mean, right now, I guess I could because we're flat right here. The long-term direction is flat here. It's flat here, and it's going flat over here on the gold. But you guys do see all these trades right here. They're triggered, right? All these. I'm trying to get my circle. That one right there. This one right here. This one over here. Let me get my circle again. Oh, come on, circle. Here it is. This one right here. No, it was flat here. Otherwise, that would have been a trade. Now, not all the trades worked out. There was one trade in here that did not work out. Where is it? Why do I have this red arrow here? That's not where I stopped out, is it? Yeah, it is where I stopped out. Oh, this is the ES. Okay, that's why. Okay, that is. I was thinking it was the NQ. There were a bunch of trades there on the NQ. This right here, we got the arrow because it just gave enough long-term direction to take the trade. No, I didn't do that one. Obviously, I wasn't paying any attention to it. Over here on the crude oil, it should have had an arrow right in there. 76.80. Okay, so now we're starting to get a little bit of direction on the crude and on the ES. We don't have anything over here on gold yet. Okay, now I'll flip the NQ back on because everything else just got flat. We can watch the NQ. Craziness of the NQ. All right. Does anybody have any questions about anything? I know there's a lot of stuff that I'm doing in here, and some of you have seen some of it in the past, but the arrows are brand new for most everybody that hasn't been here in the last 3 days. The red arrows, they're going to trigger, they would be black arrows. Wherever the red arrows trigger, they would be black arrows. I'm the only one who has that right now. What that's indicating is that the trade should have a little bit more leg in it. There's more room for the green line to go from the oversold to the overbought. It means the green line is in the oversold when it actually triggers. When the black arrow triggers, it means the green arrow is in the oversold. Okay, if it's a long trade. And if it's a short trade, it means it's in the overbought at the time that the arrow triggered. So if you're anticipating the green line is going to go from oversold to overbought, then it's starting from a lower point. That's basically all it's saying. So you have more room to run in the trade. Okay, now I may change the value of that red arrow. That's why I haven't distributed it to anybody yet. I'm actually changed the value of it. For those of you guys who are signing up or newly signing up for TradingView, and you go here to indicators and you go to invite only scripts, once we give you permission to, and you go to invite only scripts, in the context right here, the CIQ context, if you click on this, it's got release notes in it. Okay, and so you'll see the release notes in there. There's some instructions in the release notes. But also, if you go to mytradingiq.com, trade rules right here is a setup video to set up the trading view, set up the context, indicator, the rules for setting it up, and right here are all the sensitivity settings for these markets. Now, these are suggested settings. You can change those so you have more arrows. You can change them so you have less arrows. Whichever you want to do, it's up to you, right? I put that completely in your hands. Okay. What that number is going to do what it looks at is the slope of a long-term direction. If you wanted to have more arrows, reduce the sensitivity and you'll have more arrows. If you wanted to have fewer arrows, increase the sensitivity and you'll have fewer arrows. Like right through here with the ES. If I were to go in here right now, let's do this. First, let me blow up the ES. We don't really have, I guess we kind of have a trade on gold. We kind of have a trade going on crude. I'm not sure my crude down was keeping up, is it? No, it's not right. So we kind of have a trade going on gold. That's the only place, but I'm just going to do this anyway. Here. Okay, so if I were to go in here and put the no trade zone stuff on here, okay. Now you see all the pink areas of the no trade zones. That's where the sensitivity is stopping the arrows from printing. These red arrows that I put in here, those are me putting them in there. You're not going to see a black arrow or a white arrow within one of these sensitivity areas, but no trade zone areas. Okay. Now, if I go in here to the context and I change the sensitivity down here, so if I increase this to 0.75, which is what it was originally, first you're going to see these areas increase, and some of these arrows just completely go away. Okay. So you totally increased the sensitivity and you got rid of all those arrows. That's how I had it originally. That's why we didn't get those arrows in the beginning. But if I set it down some, then you're going to see the sensitivity areas, the no trade zone areas decrease and the arrows increase. Okay. So I have this set to 0.35. 0.25 works pretty well too. This depends how conservative you want to be. Okay.
Michael, and the black arrows are, when the black arrows print, that's the easy and obvious setup. Everything's in. Okay.
Yeah, if you the better scenario, probably the best the best case scenario is going to be when you get a black arrow printing off the ribbon.
Right.
Okay. Because you know the original stuff was just to look for trades that were off the ribbon when the black was in the right color, when the black line here, the black part of the ribbon was in the right color. Look for trades like that. But if you get the black arrow at the same time, then you have the slingshot in favor of the trade. You know, originally we weren't using the slingshot for anything. Like this right here is a really high probability trade right here, where the black arrow comes while you're coming off of the ribbon. Okay.
And not only that, we're in an oversold position with the white arrows.
Exactly. It's coming up out of the oversold position, so it's got longer room and more room to run right here. That's where you want to be. Okay, and you only need 1 or 2 of those a day.
So basically, if you just look for the black arrows, buy or sell, right? That's all you need.
Yeah. And if you get a red one off of the ribbon, then that's great. Like that one right there. You know, the red one. Well, the red one means that the UC, it's not just the white coming out of the oversold, but it's also the green coming out of the oversold. Okay, that's so you have everything coming out of the oversold area. You get that one. So that usually what it indicates is you have more room to run when you get a red one. And that was just a perfect illustration of it right there. You know, I haven't looked at the live stream to see if anybody's asking any questions, but I think Dwayne's in there handling that. Okay. Oh crap. You know what? I put that gold trade on. Here it is. I totally forgot about it. I've been doing everything else. That's plus 10, plus 15 right there, I think. Yeah. Okay, and let me just put it in. Totally forgot about that. Okay. Cancel the stop on the gold. Oh, do I have you're right. I do have a stop hanging there too. Thanks, Mark. The big red. Jimmy, if you see an arrow red or blue or yellow that's outside of the context colors, that's a trade that I took. I actually drew that arrow on. If you see an arrow within the context colors, those are automatic. Those are automated. Okay, like this right here is a trade on the ES. I didn't do. This right here was a trade I didn't do. Right, this actually triggered the red arrow after you would have had the ribbon trade right there. This triggered the red arrow. This right here, this one closed up while the lead line stayed oversold, but then it came out of oversold and triggered the arrow. Okay, this is all flat right here on the NQ. You want to leave that alone. This is a trade right here, crude oil that I didn't do. This one right here, the black is in the green. You got the up close with the black and the green. The long-term direction is up. That's a trade. I don't know. Oh, it didn't trigger an arrow because the white line was not oversold. Okay, that's still a valid trade right there. Alan, the 7 range. Okay, that's one of the things I didn't go over. What time is it? It's 10:13. 7 range means, the 7R means 7 range. Every one of these bars is 7 ticks high. Every single bar is 7 ticks high on these 3 charts. Every bar on this chart is 16 ticks high. In this case, tick means price movement. Okay, so if you know what the top of the bar is, you know what the bottom of the bar is going to be. If you know what the bottom of the bar is, you know what the top is going to be. Like this one's down at 91. I know the top's going to be 7 ticks higher. So if I wanted to buy an up close on this bar, I'd buy 93 right now. That's actually a trade. So if, okay, it turned out to not be a trade, but if that were the case, that's what I'd be doing. All right, so right now on the NQ, I'm gonna check this, because if we do get an up close on this bar, that's also gonna be a trade if it takes the white out of the oversold area right here. It's gonna print an arrow and it's gonna give us a trade. So it's got a low here of 90.50, so I'd be looking at a high of 92.50. Okay, now the black is no longer in the green, so it's gotta have the trigger here. Now I'll show you one disqualifying factor. I think it's gonna happen right here, and I'll show it to you in just a second if it does. There it is. You see how the red just crossed the black right there? The black got into the red instead of the gray or the green. You're not going to get an arrow when it's like that. Okay, you're not going to get a long arrow anyway when it's like that. Okay, the NQ just triggered again over there, and that trigger was from right here at 68.75, and it ran down. It didn't put in a lower swing right here. Remember what I said earlier? If you get an arrow and it does not put in a lower swing, then the arrow right after that is suspect. it. Okay. It's still triggering the same thing, but you're getting these little moves in and out of the oversold area or the overbought area. Okay. Now, I was still working on the arrow before it. So here that is, and it just gave me a break even. Okay. That was on the first arrow. I hadn't moved my stop to break even, but let me put that in right here. Okay. Break even that. Now, let me just do something for you. Okay, I know this is a lot of activity and it's a lot of moving parts and all that. But let's just look at one market, because this is what you should probably be doing. Okay, you shouldn't be trying to do 3 markets like I do. Like all in here, it was flat. You had no arrows, no indications of any trade. You did right here at the beginning when it started to give a little bit of trend, but then it flattened out. You had no arrows, no indication of any trade. That's good. Then finally in here, you got some trend, and you had an indication to take the trade. Okay, in here you had some trend, you had some indications where you should have probably taken the trade. Right here, this was actually a valid trade. Right here, that was okay to take. This was okay to take right here, even though you didn't get arrows. It's because the lead line wasn't oversold. Those are still valid trades to take. So you still have to learn how to trade if you want to take those. Those are high probability trades all by themselves without the arrows. It's just a little higher if you have the arrow. But this is what you should be looking at, right? This is something that you can do, right? You can look at one market and say, okay, I'm just going to wait. Right now I can see the long-term direction is flat, so I'm not going to have any trades, so I'm going to wait. Down here, it looks like it's going to give us something long, but nothing up here agrees with that, so you just got to wait. Now, when you're looking at all those markets at the same time with me, it's a lot to look at. It can be probably overwhelming and intimidating and all those words. But you shouldn't be doing that when you're on your own. Right? When you're on your own, starting out, this is what you should be looking at. You had a good trade there that was a nice gain. A good trade here that was a nice gain. A good trade here that was a nice gain. And you only need 1 or 2 of those. Every one of these that triggered over here in the pre-market, they worked out. You only need 1 or 2 of those. Okay. Now, at the beginning of March, is when I said, I said I was going to take the training wheels off, is what I said, meaning we were going to start taking more aggressive trades. That's when I started doing the slingshot trades. And that's when I introduced the ribbons and the NQ. And,
did you turn off the TradingView stream?
I did not. As a matter of fact,
the counter's,
it turns itself off.
The counter's
Yep,
still running, but it's the counter's still running, but it just says the stream went offline.
Yep. Nope, it just said on my side, it just said the stream has ended. So that, well, we almost got an hour out of it. We got about a half hour out of it. That's one of those things, Dwayne, whatever the directions were that Arto gave to us, you know, where he said to go in and check this stuff out and create a trouble ticket for it. Whatever those directions were, this right now is probably one of the times to do that, because all I got was that it stopped. So the live stream is stopped. So I can actually show other stuff in here right now because the live stream is stopped. But
right.
I can type in here, just say we had issues with live stream, so we ended session with plus 84 Q plus 35 gold and minus 10 yes. Let me make sure I don't have any typos because I can't undo that and redo that. So now I can actually show some other stuff in here with the trade rules, guys. If you go to mytradingiq.com trade rules, right here, watch the setup video. I created that last night. It's 11 minutes long. It goes into detail about setting up the trades. Now, it doesn't really go into detail about the trades themselves, though this, there are 3 pieces to every trade, right? There's the entry, the risk management, and the exit. These are all the rules for the entry, different entries, right? The ones without the slingshot, those are the ones that I was just referring to on crude oil, the ones without the slingshot. The black line and the ribbon must be on the bottom, and it must be in the green, right? Let's go look at that right here on crude oil, right? We're getting into the training period of it right now, guys. So I'm going to show you this right now. The black line of the ribbon must be on the bottom, and it must be in the green. A pull back down, test of the ribbon, and up close is a trade. Same thing right here. The black line is in the green on the bottom. A pullback, test of the ribbon, and an up close is a trade. You don't even need to look at the slingshot for that. Okay, if the long-term direction is right, then that's all you need. Okay, if the long-term direction is right, then that's what you're looking for. Okay. Now, when you are using the slingshot, you're going to get the arrows when the long-term direction is right. Price, it doesn't even have to touch the ribbon. You're going to get arrows like this one where it didn't even touch the ribbon. But the long-term direction has to be right. The lead line, the white line here in the slingshot, has to be in the, for a short, it's got to be in the overbought, and it's got to cross out of overbought and cross the UC line to get the trade, right? To trigger the trade, it's got to do all that at once with the long-term direction in favor of a short. Okay, those are the rules for the trade. If you come in here, it's all in here. That's with the slingshot right here. Okay. That's for a long, but for a short is what I just shown with the slingshot to be right here. Okay, those are the rules for the trade. Now the risk management, whenever we put a trade on with a 7-tick range bar, I think Al, you would ask this, right, Alan? With a 7-tick range bar, you start out with a 10-tick stop and move the stop to break even after 4 ticks in profit. With a 10-tick range bar, start out with a 15-tick stop, move it to break even after 6 ticks in profit. With a 16-tick range bar, 20-tick stop, move the stop to break even after 8 ticks in profit. With a 20-tick range bar, 25-tick stop, move to break even after 10 ticks in profit. Always looking left, all right? The time-based bars, you're gonna have to look left to see where you should go. So your charts can look, yeah, it also has one of the things here. I actually threw this at the bottom right here. If you click on this, John, if you click on this, this is going to be my charts. Okay. If you click on that, it's going to be my charts, but it'll be read only. And when you do it, it'll be read only. It'll be actually these charts right here. I'm sharing these charts right now. Okay, so it'll be these charts as they stand right now. And it'll be read only. So up here in the upper right hand corner, there's a copy button. If you get the read only version, there'll be a copy button in the upper right hand corner. Click on that and it'll ask you to rename it. So just take off the word copy, hit save, and then you'll have your own version that you can draw on and move all around and change things on. But for anybody that's got just the read only version right now, if you go here to mytradingiq.com trade rules, right here, trade rules, and click on that and open up the read only version. Right now, anything that I do on this chart is going to happen to the read only version that you have. Okay, like all the arrows that I drew and the arrows that I drew and the circles that I drew right now. If I hit save right now, that's all saved into the read only version right now. Okay. So that's how you do that. That is all part of this thing. I created I spent a lot of time last night doing this for you guys. So really go and look at this. All right. Don't ask me all the questions that are answered in here. Go and look at this before you ask me the questions. I'm not picking on you, John, but you didn't ask me anything out of here anyway. This is more information. I'm glad you actually asked that question. Yeah, because right down here, if you click on this, that is gonna resolve that issue that you had just mentioned. Okay. And David, you said the same thing. You don't seem to have the option in the indicator window. Yeah, John, you and David just said the same thing, right? So go here to mytradingiq.com trade rules. The layout that I'm using that I just saved is right here. If you go and do that, click on that right now, and you have you have access to TradingView. You have access to our stuff on TradingView. And to do that, you just have to give us your profile name. Profile name is right up here. Ours is CFRN. Yours will be something different. You just give us that information and we'll set you up with TradingView. So all you have to do is click on that link and your chart will look just like mine. Okay. So going back here to the training part of it. Now, the lesson plan, let me show you the lesson plan, okay, for today. Today is day 3. It's Wednesday, day 3. Today I was going to go over the slingshot, the divergence and separation, and leg lengths. That's what we had in the lesson plan for today. All right. For the last 2 days, we had the bar types, the range charts, tick value, DT Pro, Ninja Trader, and TradingView, the differences between the 3 of them. Up closes versus down closes, support resistance, tops and bottoms, trend trades versus counter trend trades. The BBC and the MA1, and the bar colors really only apply to DT Pro and Ninja Trader. Okay, but the BBC, the ribbon, and the context, they apply to all the platforms. That was yesterday's stuff, and this is today's stuff. So I'm still going to cover all this stuff, right? And this is tomorrow's, and then Friday is just trading. So that is the lesson plan for the week, depending on where you started your trial. That's what I'm going to go over for you. So today we have the slingshot, divergence and separation that's within the slingshot, and leg lengths. Now, I mentioned leg lengths earlier with gold, okay? And I'll spread that out here. We'll start with the leg lengths. This is a leg length that I was working with. I don't know if you guys remember when I drew that leg length, it started right here. And I said, that's what I anticipate out of that trade. I anticipate it's going to satisfy this leg length. It took it a while, but it just actually satisfied it just now. But that's what you're looking at. You look at the leg lengths, and the way that the leg lengths work, let's do this, okay? The way that the leg lengths work, the markets are always doing the same thing, right? You're going to see me say, you're going to hear me say this over and over again. If you're only here for today, you probably only hear it like 10 times. But if you come here every day and you actually become part of the whole family, then you're going to hear it again and again and again. The markets are always doing the same thing, right? They're going up and then they pull back, they go up, they pull back, they go up, they pull back. Now, each one of these moves up is a leg length, right? It goes up so many points. Now, they don't all go straight up. Like this leg length right here, it didn't go straight up to there. It went up to here, then it pulled back, gave you a short trade, gave you another long trade, gave you another long trade, pulled back again, then it moved up to there, all right? So they don't always go straight up. But ideally, you want it to be like this, up, down, up, down, up, down, up. And then you got to watch the pullbacks. If the pullbacks start to go beyond the swing lows, then it goes the other direction, right? Then your up now becomes the pullback, and your down is the leg length. Okay, so what we want to do is figure out how to take all these trades in the middle, right? And you can see we do a pretty good job of that, all right? We want to take these trades in the middle and skip this one right here. And you can see that we've done a pretty good job doing that. That's what we're trying to do. That's what we do over and over again. I mean, that's not what we're trying to do. That's what we do. But one of the indications that a trend is getting weak is when the leg length starts to get smaller, the leg length up, this part of it, this part starts to get smaller, and this part starts to get bigger. So like if the next leg up went like this, and then the leg down went like that, now it still didn't exceed this level right here, but it did exceed that level right there. So that shows weakness. This being smaller than that, weakness. This being bigger than that, that's strength to the downside or weakness to the upside. You see what I mean? So it shifted right there. And it may not change the direction right there. It may turn into some chop. It might just go to here and then go back down, and that would be chop. It might continue the trend right here just by a little bit and then pull back down. So it would give you another trade setup right here. Your entry point would be here, okay? Your entry point would be here. Your entry point would be down here. But it doesn't really give you a big push. And then your next leg down becomes too deep. It gets down below this level. Then you're not trading anymore. You're in the no trade zone, right? The long-term direction is going to flatten out like it did right here. You see this right here? This pullback is bigger than this pullback. This push up is smaller than, this push up. And this pullback right here, this is the direction change. It didn't exceed that swing high right here. Okay, didn't exceed the swing high right here. So this pullback right here exceeded that swing low, change in the direction. Okay, and then it pulls back here, finds resistance now, and it gives you the opportunity to short there. Everything is saying, okay, we've changed directions, now we're gonna go in the other way. Right here, the long-term direction changed. Over here, the long-term direction was bullish. Right here, it changed, bearish. Take your trade, take your profit, and be done. Okay. Dave, can you text that to me? Or email it to me or text it to me. We're gonna have a lot of emails today. That's why I was just saying to text it. Okay. But if you already have the context, then then you have the latest stuff. You just have to put it on. You don't, I don't have to re-give you access to it. If I gave access to it once, then you already have access to it. Okay. So does everybody get all this? All right, this is part of we're in the training part of this right now. Stepped away from the trading for a minute. Can leg length be applied to the same expected on a down move? Yes. Yes, Daryl. So when it's changed direction, this is all bullish right here, but when it changes direction, like this one, let me get rid of the drawings. I'll show you right here. This one right here, you would have anticipated it's going to exceed this swing low, right? And then pull back and give you another leg length from here to here, right? It didn't exceed the swing low, so you can't expect that. And then the pullback exceeded the swing high. So that kind of puts you in a no trade zone. When it exceeds the swing high, but you're in a downtrend, then you have to wait for it to pull back and exceed the swing high again to give you a trade, all right? So right here, this is interesting. I mean, this is an interesting place, and for you to ask the question is great. Because what I was saying is, price goes up and down, up and down, and up and down, and then eventually it goes down, and then it starts going up, and then it goes down, and then it starts going up, and then it goes down, and then it starts going up, and it exceeds the swing high, like it did right here. But then you don't know what to do then. You don't want to go short anymore because it exceeded the swing high, so you could be changing direction, so you don't want to do anything until it goes down, like it did right here, and it gives you the first up leg, like it did right here. Okay, so you had that down and that up. After getting this down, it did all this right here, all right? So when it exceeded that swing high, then it's going to change, it's going to trigger the long-term direction. It's going to change directions on you, and then it's going to pull back again, find support now, and trigger you to go long, like it did right here, okay, right there. I think I picked up, I don't know what I picked up on that trade, but I picked up something on that trade. But that's why you get the trigger right there. You didn't get a trigger right here because it wasn't sure what it should do, right? But right here, it said, okay, we're going long again. And then look what happened. When it pulled back too deep. It exceeded that. So then pulled back here, screwing up the long-term direction, gave you a push down. Then when it pulled back again, it messed it all up again. And then the long-term direction finally changed to bullish here, and it gave a little pullback, a push up. Didn't give a trade set up there because nothing is set up down here. Then it pulled all the way back down here to the ribbon. And this is one of those trades that I was talking with Bert earlier. If you get a bounce off the ribbon where you get the black arrow off the ribbon, those are really high probability trades, right? This one, it took a little while for it to do it, but look, I mean, it went all the way up here to the swing high, right? So now it's got to exceed this swing high to really give you a good feeling about continuing the trend up. But that's how you do it, okay? So that was a great question, Daryl. It does the same thing on the downside as it does on the upside, right? And this is just this is just a random look at it, but you see how the arrows are triggering wherever a good opportunity for trade is. This was actually an opportunity for trade right here. When you look at this right here, long trade without the slingshot right there. That's what this is. Long trade without the slingshot. It pulls back, hits the ribbon, gives you a close. The black is in the green. The long-term direction is bullish. No using the slingshot on that one. This one right here had all those things, plus you had the slingshot. Okay. Still not seeing the TIQ context now, but slingshot on TradingView, so not getting the arrows. Right. When you go to indicators in invite-only scripts, do you have these two things in there? Oops, I just added two more. Do you have those two things in there? Hang on, let me delete those. If you don't have those two things in there, then you're not set up for it on TradingView. Okay. Okay. You have to give us your profile name. Your profile name is going to be over here in the right-hand corner. It's what you use when you log in. We're logged in as CFRN. All right. That's our profile name. So you got to give us that profile name, Jason. And there is an email that I will send out that has information in it. I'll show you what the email looks like. Okay. I disconnected myself. That's okay. It'll connect right back up. The email looks like this. Okay. Hang on. I gotta move stuff around. I suddenly have a lot of things on this other monitor. Templates, TradingView layouts. Okay, the email looks like this. All right, and this video goes into setting up the trades and all that. Like this right here, it didn't give us an arrow, but right there on what is that? I think that's the NQ, right? That's just a long trade off the ribbon there on the NQ, I believe. But I'll send you this email, and you watch this video after this goes over some of the rules. Now this was before the arrows. I made this video before the arrows were there, but it goes over the basic rules about taking trades off the ribbon without the arrows, without the slingshot. Okay, this is how you can sign up for whatever different levels of TradingView you want to. If you use this link, you get 30 coins, and we get 30 coins if you decide to use this link. I don't know what the coins are worth. I don't know how to redeem them, but you get 30 coins. They're TradingView coins. You get 30 and we get 30. Okay, if you don't have it, go here to trading platforms and watch the video there on how to download it. And this is the layouts, right? So if you do all that, this is what it's going to look like. If you click on the link that I showed you earlier to get a read-only version, you're going to have this word copy in the upper right-hand corner. Right? If you click on that, then you just have to rename it and it'll be yours. These are all layout links. This is the same one that I gave to you earlier for different levels of entry. For the free one, you want to use this. If you're not paying for TradingView, use this one. If you're paying for Pro, then you can use either one of these and this one. If you're paying for Pro Plus, you can use any of them. Okay, Pro Plus will give you up to 4 charts at once. Pro will give you up to 2 charts at once. And the free one will only give you 1 chart at once. The other thing about the free one is you don't get custom time frames, time intervals. Okay, you won't be able to choose a 7-tick range. You have to use a 10-tick range, which is okay. If you want to do the free one and you want to use a 10-tick range, I gave you the rules for that right here with a 10-tick range. Use a 15-tick stop with a stop to break even after 6 ticks in profit. Okay. How can you get that email that I'm showing? Sign up for the free trial. Okay, go out to mytradingiq.com and right at the home page. I guess I can go there now. If you go here to mytradingiq.com, just sign up for the free trial here. In the sign up for the free trial, it's going to ask for your profile name. Okay, if you sign up for the free trial and you give us the profile name, then we'll set you up as soon as we respond to that. Okay. Kent, we don't have this stuff on Ninja. So if that's a new machine ID that you have for Ninja, can you email that to me? If you need me to set up with the new machine ID for Ninja. But this stuff is only on TradingView. All this stuff is only on TradingView. It's not on NinjaTrader. Okay. But email that to me. So I'll have it in an email that I can copy and paste. Okay. Because if I screw up one of those digits or letters, then it won't work. And it'll be chasing our tails, and I really don't like chasing my tail. All right. So the things that were in the lesson plan. Let me go back to that. For anybody who's just getting in, we're on day 3 of the lesson plan. This was day 1, this was day 2, and this is day 3. So I went over the leg lengths in a lot of detail. I think I went over the leg lengths, the slingshot and the divergence and separation. Now I got to do that in 2 separate things. All right. When I say divergence and separation, when I'm referring to the slingshot and I say divergence and separation, I'm talking about within the slingshot. All right. I'm not talking about between price and an oscillator. I'm talking about within the slingshot. Now, with the trading view where you have the ultimate slingshot, you're not going to get that divergence and separation, right? If I were to add the S3 line in here, if I were to add this in here, then you would get that divergence and separation. Okay, but we don't need to use that in here, right? We don't need to use that. So I'm going to get rid of that for right now. You know, for anybody that's got experience with our indicators, then you might, if you wanted to add that, you can. You don't need to. There's no reason to. But that's for in here. If you're using TradingView, I'm not TradingView. If you're using NinjaTrader or DT Pro, let's look at one of those charts right now. Here, this is DT Pro 7-tick range. Okay, now when you see me trading on the DOM, it's my DT Pro DOM that I'm trading on. It's just easier to trade on the DOM, and it's direct access to the exchange if I trade on my DT Pro DOM. I don't use the TradingView DOM. This is the TradingView DOM right here. I don't use that one. I use the DT Pro DOM. Okay. But in here, divergence and separation within the slingshot. This is what I was referring to in the lesson plan. When the cycle, which is the red and green line, is separated from the green line. This is the red and blue line. It's separated from the green line. This is bullish divergence, bullish separation. Okay. And when it's the other way around, it's bearish separation, bearish divergence, like in here. And then you're looking for an opportunity to go short, right? If it's like this, you're looking for an opportunity to go short. And if it's like this, you're looking for an opportunity to go long, right? Now, we did this for over a decade. We did this stuff, right? And this is great. And it's all built into this. This is just easier. Okay, because on here, you're going to have to draw trend lines and you're going to have to reference a slingshot most of the time. You're going to have to draw trend lines and reference a slingshot most of the time. In here, you don't have to draw trend lines. You don't have the colors to worry about. The ribbon, you have to worry just a little bit about the ribbon, but not as much as you do with DT Pro and Ninja. You never have to draw a trend line with this. And you know, with this, I give you the long and short-term trend. I display that for you. So you don't have to, like with DT and with NinjaTrader, you have to actually figure out, you know, do we have higher highs and higher lows? Draw yourself some trend lines. What's the long-term direction? You go back a little further and see if the long-term direction is in agreement with the short-term direction. So when doing all that, you take away from your time looking at the charts to place trades. Okay. I've put all that down here in the chart for you now. You don't have to do that anymore. The long-term direction, if this is bullish, if it's separated, you see two lines down here, that means it's bullish. And if it's blue, that means the short-term and long-term are bullish. If the ribbon is red, that means you're really in a good opportunity to take a trade if you get a pullback, right? If the ribbon is red. Now, every Thursday night, there's a partners meeting. And this Thursday night, I have something else that I'm going to show to anybody that's a partner that makes it to the meeting on Thursday night anyway. And I'll show you guys, you know, you guys are probably going to be going to say, oh, well, I probably saw that, but I didn't really think of it. Or something like that, but I'll show it to you on Thursday. And it's a great thing. It'll give you guys a lot more opportunities just something to consider. Okay. So again, my whole goal here is to make it easier for everybody to trade. You know, it's partly driven by my own selfish ambition to make it easier for me to trade. But I mean, making it easier for me, I just make it easier for everybody, and that's the whole goal. You know, I trade for a living, so you know, I'm in here to make money just like you guys are. There was just another short right here. Now, this was a ribbon short. If you go back and follow these rules right here, right? If you follow these rules, that was a short trade without the slingshot right here. Okay, the black line and ribbon must be on top and be in the red. That's what just happened right there. Black line in the ribbon was on top and it was in the red. That was a down close. You didn't get any trigger on the arrow because the slingshot wasn't needed and it wasn't right. Right, so this is going to trigger an arrow right there. It's going to trigger an arrow because the slingshot is in the right position. And right now the black is not in the red, so you would need something like that. Okay, so you would need something like that, and that was just a trade, and I just took it, and here it is. My stop's at break even, and I'm out of break even. Okay, but okay. Does anybody have any questions? Because I feel like I might as well lose my voice again. Lou W. If you just jumped in on this, I know you said that a few minutes ago, but I don't know if you signed up for the trial yet. I haven't looked at the emails to see if you signed up for the trial. But if you did sign up for the trial, you're going to have to, using TradingView, you're going to have to give us your profile name. If you want to use, if you have NinjaTrader or you have DT Pro and you want to use TradingView, then you can take the trial with DT Pro, NinjaTrader, and TradingView all at the same time if you want. You just got to let us know. Go to, go here to mytradingiq.com, click on trading platforms, just follow the instructions. DT Pro is the one on top, TradingView is the next one down, and NinjaTrader is one after that. Okay, just follow the instructions. If you have TradingView, you're going to have to give us your profile name. All right. TradingView, we set up ourselves for you, so that's really easy for us to do, and we get that done right away. NinjaTrader, you're going to have to give us your machine ID, so part of that is on you, and then you have to do the install and all that. Okay. All right. You're going to have to email that to me or text it to me. Everybody that's in here, I'll give you my number, okay? My number is 617-943-3298. It's 617-943-3298. You can text me your profile names, text me your actual name too. Okay, so I know who you are. You can text me your profile name at that number, and I'll set you up with TradingView. Okay, because right now I know we're going to get a whole bunch of emails and things are going to get lost in the email. Can you use these same templates on NinjaTrader 8, Vishal? No, you can't. I only have this for TradingView. I don't have it for NinjaTrader or DT Pro. Okay. 61. Here, I'll type it in. I'll type it in. Okay. 617-943-3298. Text it to me at that, and make sure you put your name in there with it. Okay, so I have your name to add to it all. And what was I looking at? It was, yeah, that was it. That was it. All right, so it's 10:47. I want to look at the lesson plan, make sure I cover the lesson plan, and then I want to go back over the stuff that I did the last couple of days quickly, because I know there's people in here that, you're in here today for the very first time. You don't know all the other stuff. So I went over the leg lengths pretty good. I went over divergence, separation, and the slingshot. I think I covered that pretty well. Now, for anybody that's brand new to us, bar types, range charts, and tick values, the differences between DT Pro, Ninja, and TradingView, up closes versus down close, support, resistance, trend trades versus counter trend trades, all that. I'm going to cover all that really quickly right now for you, okay? This stuff right here from day one. Excuse me, the day one stuff. Now, we use range bars in here, and the reason we use range bars is, let me blow this up so you can see. If you know what the top of the bar is, you know what the bottom of the bar is. These bars are all 7 ticks high. Every one of these bars is 7 ticks high. If you know what the top is, you know what the bottom is going to be. So to be proactive with an order, like if I wanted to short on a down close of this bar, I'm going to short 39.92. That is 7 ticks down plus 1 tick right there. See, right there, I would have just filled 39.92 if I wanted to short it down close. It's not an actual trade setup, so I didn't do it. But if it were a trade setup, then I would have had my order waiting there. And to see that that's what I've been doing so far today. You're going to see me doing that over and over again. That's how I entered the trades, right? Like right up here, I knew the high of the bar was right here at 96.50, so I would have shorted 94.50. I would have had a sell stop limit waiting at 94.50 for the down close of the bar. Okay, and when the bar closed down, it would have triggered me in, and I would have been short right up here, taking profit. Right now, I've been taking profit. That's why I use range bars. Every bar you see in here is 7 ticks high. This is a 7 range, 7 ticks high. The ES is like that, gold is like that, and crude oil is like that. The NQ, I have, because it's so volatile, I have a 16 range. In here, right here in the risk management, for the different bar sizes, I have what you should do for your risk management, how big your stop should be, when you should move it to break even. That's what I suggest for the different bar sizes. And you can trade these bar sizes on whatever market you want. Like I have the NQ on a 16 range and all these other ones on a 7 range because they're not as volatile as the NQ. Now you could put the NQ on a 7 range and you get chopped up constantly. I mean, you'd be taking, if you had an actual bracket on it, if you had like a 10 by 10 bracket and you did everything right, it'd probably work out well, but it'd be crazy trading and it'd be over trading. You'd be trading again and again and again. That's not a good way to trade. Unless you're a machine, nobody makes money like that. Okay. Okay, so that was the bar types. The chart types, well, let's look at it. In here, it's a little. Let me do it with ZT Pro. Okay. There are different types of charts. Right? If you go to custom, these are all different types of charts. You have your time-based charts, right? So if I want to do like a 6-minute chart, for instance, I would click on that, and every bar would be 6 minutes. It would take 6 minutes to go from one bar to the next. Now, all you know about that bar is when it's going to close. All right. That's all you know about that bar is when it's going to close. You know when. You don't know where. You have any idea how high that bar is going to be. It could be just a flat bar, a 6-minute bar. If you change this to 6 minutes, it could be a huge bar like this one. It could be a little tiny bar like this one right here, or this one right here. It could be a little tiny bar. You don't know anything about that bar except when it's going to close. That kind of sucks. You lose a whole bunch. You lose a whole bunch of information by doing that. Right? That's all you know is when that bar is going to close. I know that this bar is going to close after 6 minutes. So how do you use that information? You really don't have any way to use that information, right? You don't know where it's going to close. You can't use that. You don't know if it's going to close up or down. You know, something could happen right now and this bar could tank all the way down to here. Or something could happen, it could rise all the way up to here. You don't know. You have no way of taking action. Like right here on this bar, like I knew the down close of that was going to be, it was going to be an opportunity where I wanted to short. And I knew where the bar was going to close. And so I could take the trade right there. Okay. Now that wasn't an actual short, but if it was an actual short, then I knew where that bar was going to close and I could have been ready to take the trade right there. Okay. Now it's not looking bad for a short. So here, I took the trade. So there, I don't know what I just got, 4 points, I think. That was 16 ticks. And that's, there. So we did get the arrow. I knew that was going to be a trade. So I mean, now it's actually giving you the arrow. You could take the trade right now too. Take it again. Okay. And now stop to break even after 8 ticks in profit. And I want to break even on the arrow. Okay. Hang on. Let me put these in here before I forget. This was a second one was a break even. The first one was profitable. I try to keep track of this so when I go into it later, it all makes sense. Again, at the end of every session, guys, we fill out the spreadsheet. The spreadsheet goes back with our daily results, going back over 10. I'm trying. You just give me this. Why is it popping up? Oh, it's right here. Okay, it's hidden. Okay. So one of those, I took 16 ticks, and one of those I took a break even. I fill out the spreadsheet at the end of the session. The spreadsheet goes back with our daily results, going over 10 years of our daily results. Right. I do that at 11:25. So in about 30 minutes, I do that. But the bar types, this is a 6-minute bar. Now you don't know anything about the bar except when it's going to close, right? And any of these other bar types, if you go in here to custom, you go to tick bar. Now the word tick means transaction. So if we do like 250 tick bar, this is the ES, so that's not going to be good. Let's do a 1250 tick bar on the ES. That means every 1250 transactions, the bar is going to close. Again, you have no idea where that bar is going to close. All you know is that after 1250 transactions, it's going to close. Now, that could make it go all the way up here. It could go all the way down here. Now, it looks pretty good here, and that's all good. You can use that kind of a bar if you want to. You'd be shorting right here off the ribbon. You'd be shorting here off the ribbon. You'd be shorting right here with the trend line. So that's all good. The stuff all works that way too. But again, you don't have the same information that you get from a, sorry, I left my stop on that in Q-Trade, and it just gave me a bunch. I actually left both stops on both of those trades. And it just triggered me in twice. I just took it off. Anyway, that doesn't count for the total. But that's a tick bar. That is a transaction bar. Again, all you know is when the bar is going to close. You don't know where it's going to close. You know when. Same thing with the volume. If this was like 1,000, or it's, let's say a 1,500 contract bar. Now, every 1,500 contracts, you're going to go to the next bar. Again, you don't know where it's going to close. Okay, we use range bars. With a range bar, I know, like if I do this at 10 ticks, I know every one of these bars is going to be 10 ticks high. Every one of these bars has to close either at the top or at the bottom, right? It has to close at the top or at the bottom to move to the next bar. So I know if I got this bar right here, the top is right here at 91.75. The bottom, if it's going to close down, the bottom can only be 10 ticks below that, right? It can only be 10 ticks below that. And it's got to close either at the bottom or at the top. So if I'm anticipating a close at the bottom, then I can be proactive and set my sell stop limit 11 ticks away, right? 1 tick beyond the bottom of the bar because I know where the bar is going to close. So that's all good stuff, right? That's why we use range bars. And this right here should be a 7-tick range chart. Okay, so you see this is a 7-tick range here, and this is a 7-tick range here. Actually, that's the NQ. Is that the NQ? No, that's the yes, that's right. Okay, that's all good. So that's why I use range bars. That was bar types, okay? That was from day one. That's why I use range bars in here. Let me go look at the lesson plan again. Okay, let me minimize this. The tick value, well, each market has a different tick value. This is the ES. Each tick means each price movement up and down. For the NQ, it's $5. For the ES, it's $12.50. For both of these, it's $10. Every tick up and down, and that's per contract. All right, with one contract, every movement up and down with this is $5. Every movement up and down with this is $12.50. Every movement up and down with this is 10 and 10 for this. Right, so like right now, on the day right now, we're plus 100 ticks on the NQ. That's $500 a contract. We're plus 35 on gold. That's $350 a contract. We're minus 10 on the ES. That's $125 a contract. Okay, that's where we stand right now on the morning session. This was a really nice looking trade right here. I'm not in. I'm not in any trades right now because I'm doing this part. But am I marking and looking at the ES, but took the trade off the? Hang on. Why can't I see that whole thing? NQ DOM. Oh, I did do that. Yeah. Okay, that's probably true. Sorry about that. Do I use a limit order after the arrow appears? Almost all the trades that I enter are going to be a buy stop limit or a sell stop limit. Okay, that's a good question, Alan. I do use limit orders almost all the time, right? And I have a pretty good idea when the arrow is going to appear. So if I see a bar like this and I say, okay, this gives us an up close, and it's going to pull the bar out of the oversold, it's going to pull the lead line out of the oversold, we're going to get an arrow. But I also know that this is a trade anyway because it hit the ribbon and the black is in the green. So it's going to be a trade whether I get the arrow or not. So I would be proactive on that, and I put the order on ahead of time. That would be a buy stop limit order that I put there, Alan. Okay, and thank you, David, for pointing that out. But one of those, the NQ trade that I took was on the NQ, wasn't it? I didn't take an ES trade based on the NQ or something like that. I don't know. Well, it worked out. I was looking at this over here, right? No, it was right in here. It was right in here. But you are right. I should have taken. You are exactly right. I should have taken all that profit on the ES, not on the not on the NQ. But I ended up getting it on the NQ because I'm still showing minus 10 ticks on the ES. Okay, so these trades here were not actually on the ES. I actually placed them on the NQ by accident. But anyway, I did get that profit on the NQ. All right, so yeah, back to the lesson plan. Okay, I'm anxious to get back into the trading here because it's 11 o'clock and that's when I start trading again. Tick value, up closers. Oh, this is one thing I should show. Support and resistance, tops and bottoms, all that kind of stuff. All right, let me grab a market that doesn't have a trade. Gold's got a trade right here. The crude's about to have a trade. Crude did not put in a lower swing, so I'm not as interested in the next arrow that's going to happen right here. See that arrow? Just enough to get a break even. This arrow was profit. This arrow I'm not going to do. This did not put in a lower swing. This is changing directions. So let's blow this up. Blow this up. And I want to move it over like this. All right, so what I was about to show you, we have these things called weekly trading zones, all right? Well, that's what I said earlier, Joan. I used to always say, if you're going to trade the NQ, you should probably trade just the NQ. But what I'm going to show in here, we have these things called weekly trading zones, and I'll show them to you in just a minute. Well, I'll show them to you right now. Let me show them to you in here. Hold it. Where's my ES chart? Here it is. Okay, so I have them on a 30-minute chart right here. No, I don't know why they're all, okay, these are weekly trading zones. These come out Monday morning at 6:15 a.m. These are support and resistance levels. Okay, that prices, they really gravitate toward the support and resistance levels created by the weekly trading zones. So I know that this is a level here. Like up here, it's 40.26, and the one down here is 40.95, 39.95. So let's just say we're working with those levels, okay? And we have some level way up here. Let me draw it for you. We have some level way up here and some level way down here. Now, some people are going to say, all right, when price gets up here, you want to sell. Or when price gets down here to this level, you want to buy. They'll call it a pivot point or something like that. Whatever they want to call it. They'll say when price gets up there, you want to sell, or when price gets down here, you want to buy. They're picking tops and bottoms, or they're trying to pick tops and bottoms. Now, I don't do that, right? I do want you to sell up here, but I want you to sell to exit the trade, not to enter the trade. Because on the way up here, you can have all of this, right? And so you're going to be in the trade right here and exit the trade right there with profit. So you do want to sell, but you sell to exit the trade with profit. And then when it starts going back down, when it gets down here, you do want to buy, but you want to buy to exit the trade. So that's what we're doing in here. We're taking these pieces out of the middle. All the middle part in here is where we want to trade and make the money up and down, up and down, up and down, over and over again. I don't want to wait for you to get up here and take the chance that it might be right there, but wait for it to get down there and take the chance that it might be right there. I just want to take the easy and obvious trades that are going to happen in the middle, in between all those spots. That's what I want to teach you how to do. All right. That's what I do over and over and over again. Okay. So you slide this back here and see, like, let's say there was a level up here and there was a level down here. Or, a level up here and a level down here. On the way up to this level, we had to trade here, trade here, trade here, trade here. There's a trade in here that would have worked out okay. Trade here that would have worked out okay. Trade here that did work out. Trade here that worked out. This one wouldn't have worked out very well. Either one of those would have worked out very well. But you see on the way up, there are all those trades. And so you're exiting on the way up, right? And then turns around and starts going down. So now you're looking for opportunities on the way down to take trades, right? In this case, it just didn't seem like there was any. This is crude oil. It just didn't seem like there were any in here. Now we had the crude inventories come out probably right around this time. The crude inventories came out at 10:30. But I talked right through all that. That's okay because I don't like to trade during the crude inventories anyway. But so the level is down here now, we'll say, okay? So it's pulling up and going back down to that level. We don't want to trade at that level. We don't want to buy here to enter the trade. We want to buy to exit the trade. So you short here, buy to exit the trade. Okay. If you had a short up here, you'd be looking for it to get down here and buy to exit the trade. Okay. That's what we want to do. That was from the lesson plan day one. This part right here. Right. So I did all of that. And day two, the BBC, the MA1, the ribbon, the context. I did the context, the bar colors. I'm not going to go through all that right now because I'm just using TradingView right here mostly. The slingshot, divergence, and leg lengths. I did that, and then tomorrow is the DOM, the weekly trading zones, and stuff like that. Okay, so now I'm at the point where I can get back into my trading and start making some more money. Does anybody have any questions right now? I'm gonna have to take a quick break and get a drink. Okay, I'll be back in just a minute. You guys hang out for just a minute. I'll be right back. Okay. Now I have my drink. Okay, so now we get right back into the trade. This one right here, when Bert was asking earlier, so far the voices you've heard here are Bert and Dwayne and me. Bert was asking earlier about when it bounces off the ribbon, the black line. This is what you're looking for right here. This is a really high probability trade if you have a black arrow off of the ribbon. Okay, Cliff. Yes. Ray. Okay, let me put you down again, Ray. Okay. You're away till the morning. Okay, Cliff. I was gonna send you another workspace, Cliff, that has just the DOMs in it. You just have to open the workspace up. Okay. For you, if you're still listening right now, for you, you just have to go to the DT Pro control panel, like File, Workspaces, Open. After you save what I send to you. Okay. And for you, you really should just have to do that anyway. Go to the control panel, go to File, Workspaces, Open, and then open the one we created yesterday. Okay. All right. Now I haven't looked at any emails that have come in, so if you sent me an email, I haven't checked it out yet, and I'll try to check it out when we're done in here. Now let me go over that one time with you. Now right now we don't have any trades just yet. This is giving us an arrow here for a long trade on the NQ, but I want to kind of let it pull back a little bit. It's consolidated here, and this actually should give a huge leg length up. I'm actually kind of liking it right now. It should give a huge leg length up after this consolidation. Okay, so it did give us the arrow, and I took the trade. Now let me take the trade. I'm going to throw my stop at break even. But remember what I was saying about leg lengths. This right here is how big the leg length should be. That's what I was talking about. So we're in at 25, and I'm going to let this one run because the leg length is huge. So if it does do this whole leg length, it should go from here all the way down here at 01, like 25 points. So go all the way up to 50. And we're toying with the high of the day right here. Okay, so I don't have any risk on this trade. And it's consolidating a little bit, playing with the high of the day. And I think once it goes through it, this is going to be an awesome trade. We're in at 25. So, if I go up here for right there. Okay. See, I'm going to get break even, or I'm going to get something really big on this. Okay, so I'll just leave that there and let that go and break even. Okay. It's going to give us another trade setup here, though, I think. Okay. So let me just put that down. It's in for like a 25-point move up right here. Okay. NQ trade. All right. So everything else is kind of quiet right now. Everything's settled down quite a bit here. Chris, you have not shown up until today. Funny, everybody that I was supposed to meet with on Monday. I will put you on the list too. Okay. I mean, it was okay because you open up spaces for other people on Monday. All right. So things are starting to flatten out everywhere but the NQ. Things are starting to flatten out. Right here, the crude oil is really flat. Over here on the gold, it's getting flat. The ES has got bullish separation. It just changed right here. It went from flat to bullish. So the ES has got bullish separation. So we could get something there. The NQ is giving us the red right here. It's suggesting that everything is oversold, and it's looking to be over or run up some more right here. And remember, we're looking, this is still part of the consolidation after this leg up. It's got a long trade in here. So, all right, I jumped in again. I didn't get a great fill on this one. I went on the red one right here. And so my fill is up here at 26. I'm going to actually lock in 1 point on this to pay for the last 2 trades. And it's taking me out with 1 point. But this should have a huge run right here. Okay. Just trade what's in front of you, right? Let's see. There's nothing in front of us here on that one to that one. This one is about to give us a trade, but it's got to pull back. It's not going to give us any kind of an arrow or anything like that because it's not oversold. Right? 1 point is 4 ticks, and that's worth $20, Travis. 1 point. 1 tick is worth 5, but 1 point is 4 ticks, and that's 20 on the NQ. Okay. And that's why when I said that, I'm going to take 1 point. It was $20 to pay for my last couple of trades. That covered like my last 4 trades. And so, okay. That's what I was talking about when I said that. All right. So now that I've done all that and I'm paying attention to the markets again, everything's slowed down on us. That kind of stinks, but it's okay. Does anybody have any more questions right now? I know I have the people who I said I'm going to meet with today. You're on the list, and I will get in touch with you and work out a time with you guys, okay? All right, so on the ES right here, it's got a long trade. And looking left, the immediate looking left is up here at 39.98. The DOM is actually suggesting it's not going to go anywhere. It is a valid trade, so I put it on. We're still at -10 on the ES right now. And I do have this one on the right market, David. Now at 4 ticks in profit right there, I'm going to throw the stop at break even, and I'm looking for it to get up here to 98. Okay. Locking just 1 tick on this, and we'll see where this ends up going. It's not really showing anything in the DOM right now. There it is, 39.97. 39.97 is where I should go to right now. Okay. I'll throw a target right there at 39.97. That would be 11 ticks, I think. So maybe at 1 tick or 11 ticks. We'll see. Nothing over here on the gold and nothing here on the crude oil right now. Okay. And the NQ, I don't really want to do anything here either. It's starting to flatten out on us. Okay. I'm -10 on the ES right now still. So it'd be good if I get the 11 to get me to the positive anyway. It's starting to load up a little bit on the upside here. See the numbers down here at the bottom? They were just starting to favor the upside. So I'm just going to let it go. It's going to be 1 or it's going to be 11. That is 11, right? It's 4, 8, 9, 10, 11. Yeah, it's 11. Okay, the NQ is starting to drop right here. I think that's going to be bad. We're going to end up with the 1. Yep, we're going to end up with the 1. Okay, but it was still a valid trade. And I did have an opportunity to take about 6 out of that. See, the NQ got flat and it's starting to drop. The ES is probably going to do the same thing. Crude oil is flat, gold is flat. So everything's flattening out. So right now, if anybody's got any questions, anybody who's in here, if you have any questions, that was a great time to ask them. Okay. David P. and Robbie, and you guys that I talked to yesterday, and Evans. I don't know if you're in here right now. You can see there's a lot of people in here right now. No, Evans is not. Okay. All right, so we just gotta wait for a trade. We're not getting anything right now. We took the 1 trade that triggered, and now we have to wait. So right now on the day, I'm plus 104 on the NQ, I'm plus 35 on gold, and I'm -9 on the ES. I still don't have anything going on with crude oil. Did I not take a single trade on crude? I don't think I did. So we had this one nice trade that I missed, And crude was really flat right through here, so I didn't look at it at all. And did give some winning trades in here. That would have been a break even. That would have been a break even. That would have been a break even. That would have been a profitable trade. That would have probably stopped you out. I wouldn't have done that after the stop out because it didn't put in a higher swing. And that would have stopped out. Then goods in here, break even, profit, and that would have been a stop out. So the crude is just a mess. That's why I haven't traded crude. I placed a single trade on crude. All right. So I said we're going to do a 3-day open house. So we're going to do this again tomorrow. Right? If you guys want to come back tomorrow and watch all over again tomorrow, that's good. If you want to get the indicator set up so you can actually participate tomorrow, then you're going to have to give me your profile name. Right? If you want to actually do this stuff and get it all on your charts, then give me your profile name and we'll set you up. All right, we'll get you set up today sometime. Everybody that's texted me so far, I will get you guys set up here during the break. And Arcan just needs to show up to this. Okay. On the ES, we're in the ribbon right now. We're not going to get an arrow out of this, but if we get an up close, that would still be a valid trade. Granted, the last one did not put in a higher swing. So what I said earlier about being suspect of the ones that come after you do not put in a higher swing, that's happening right here. Remember when I say the markets go up and down and up and down, and then eventually they lose their steam and they don't go up and exceed the prior swing high. And then their pullbacks get deeper. Okay. Or they just end up being in chop. So that's what's happening right here. It's pulling back into the ribbon. If it were to give you an up close right now, the black is in the green. Long-term direction is bullish. But this last move up right here, if it had any strength in it, it would have put in a higher swing. Right? You see that just closed right down through there. And so now it's turning like it's going to not give us a trade. Right? You see that? And look at the long-term directions here and here. They're both starting to turn down. This is going to go down some more here to really convince me that it's going to go down. But this is not going to give us a trade. The black is going to be out of the green right now, and it's not going to give us an arrow because it's not oversold. Okay, see the black is out of the green, so it's not a trade. Now the black out of the green, that applies when you don't have the arrow to support it. You don't have the slingshot to support it. Okay, so what I was talking about being in this junk right in the middle here, the middle of this last leg, you're in the middle of that junk right there. You don't want to take part in that. Let it figure out what it's going to do before you get involved. Okay. JNQ is gonna, I think that's gonna be a trade. It didn't put in a lower swing. So again, you're in the junk, right? Yeah, actually, it's not a trade. It's not a trade at all. The black got out of the red, so it's not a trade. So we don't have anything happening here right now. All right. So now I get to take a little bit of a break. Remember at 11:25, I'm going to fill out the spreadsheet, put all stuff in the spreadsheet. This stuff I can put in because this is just what it took to get the goal. Today it took 2 minutes and 1 trade to get to $300 contract. That stuff I can put in right now. And over here I can put the date in. Today is 3/8. That stuff's not going to change. The other things through here, they may. So I fill that out in 5 minutes. And right now, the crude oil is not giving us any trades here. That's gonna be weird to not have anything on crude. Gold, we had a pretty good run on gold earlier. We're up 35 ticks in gold. The ES, I'd like to get positive on that, but it's just not giving us a trade setup right here. Right, and this right here, it gave just a tiny bit lower low on the NQ, but it's still all chopped up in here, right? Within this leg length right here is still all choppy within that leg length. So you don't want to do anything until it starts to break out of there. Okay, see right now you got your long-term duration is bearish, but everything in here is not. You see the green that got up into the black line right there? That's what stopped the arrow from printing right there. That green got up into the black line right there. Because we had this oversold, overbought. It crossed down out of overbought, but because it pulled back too deep right there, got the green into the black line, I canceled the short trades. Okay. Something. Those of you guys that were following on Friday last week, I had to do some adjustments because we had in flat periods, I think it was on the ES, I think last week, but in flat periods like this one right here, or like this one earlier in here, it was giving me arrows in there, and so it wasn't reading something right. So I made the required adjustments, and those should not happen anymore. Okay. All right, well, crude oil is starting to move, and it may give us our first opportunity to trade on crude. We only have a couple of minutes left in here, so I don't know if it's going to. Probably won't. But that's the only market that's starting to move right now. So we're going to end the session the way we started, with really flat markets. The crude inventories did come out today, and I hadn't looked to see what the crude inventories were. If you look at this, for you guys that don't have your own news site that you go to for news, this is a pretty good one. I go to forexfactory.com. It's free. Joel's Shallow openings right here. The crude inventories came in with a draw of 1.7 million barrels. They're expecting a build of 1.3. It used to be that would be a red thing, but now they're calling it good news. Who just texted me from 321 number? Oh, there you go. Okay, you put your name down there at the bottom. Okay. Ray, which one is it? The please select thing, or is it your actual name? I think it's the please select thing, right? Okay, it'll show up for me when I go to type it in. All right, but anyway, yeah, so things have calmed down, and we don't have any more news today except the beige book that's coming out this afternoon. Tomorrow morning, when we start up tomorrow morning, we are going to have pre-market unemployment claims, FOMC speaking, natural gas. We really don't have much going on tomorrow. Friday, we're going to have big news, pre-market big news Friday. Okay, so we should have some pretty good volatility on Friday. So we had good enough today. We had plenty of volatility today. Right, the crude oil is pulled back enough so it might give us an arrow on an up close, but it is going to be time for me in 6 seconds to do the spreadsheet. So it looks like I'm going to end up with no trades on crude, and all these other markets are ending flat. All right, now I do the spreadsheet at 11:25, and you can see it is right now 11:25. So let me do this. Today in the euro, we ended up with the NQ ended up with 104 ticks. And the crude oil, we ended up with 0, we didn't trade. And the gold, we ended up with 35. And the ES, we ended up with -9. Okay, so we ended up with 887 at the end of the session. Today it took 2 minutes and 1 trade to get to the goal for the day. I did have 3 contracts on at that point, and I got 20 ticks on that very first trade. And that put us at $300 a contract. And we took a total of 5, 9, 10, 11, 12, 13, 14. Not as many trades today. I did a lot more talking today. Today is the 6th day of the month. And 44th out of 45 days that we got the goal. Then we had a green day anyway. And the 14th consecutive green day. And 392 days. Those are business days since my last red day. 392 business days since my last red day. That's puts it in 2021. And this becomes a 45. Okay, and this becomes a 44 out of 45. And this becomes a 392. Okay, so if you're going to read this, you got to read all the CFTC risk disclosures. I get that, Chris. You got to read all the CFTC risk disclosures down at the bottom. Today is the 8th day of March 2023. We made 104 ticks in the NQ, 0 ticks in crude, 35 ticks in gold, and we lost 9 on the ES. That put us at 87.5 on the morning session today. It took 2 minutes and 1 trade to get to the goal for the day. At that point, we're at $300 a contract. Or $300, not $300 a contract, $300. Okay. We had 3 contracts on, and we made $300 with 3 contracts on, getting the goal, right? And we took a total of 14 trades today. So you can see how the 14 is kind of a drop off after the number of trades that I've been taking since I added the NQ in. Anyway, on the month, we're at $4,750. That's over 6 trading days, averaging $791 per contract. We've gotten our goal on 44 out of 45 days so far this year, and we've gone 14 days since our last non-green day, and we've gone 392 days since our last red day. A red day means I didn't get the goal for the day and I ended negative. A non-green day, well, in this case, it was a blue day. It means I got the goal for the day, but I gave it all back and ended negative. That was a few weeks ago. Okay, on the year now, we're at $19,550. That's over 45 trading days, averaging $434 per contract per 2-hour trading day. Now, the first 2 months, I took it kind of slow, right? But now that I added in the NQ and I added in the arrows, you're gonna see these numbers start to increase. Now, the thing that I did all of last year, if you go back and look at last year's stuff, if you guys are in here for the very first time, you go back and look at all last year's stuff, I didn't stop to do an hour's worth of training last year. I just traded the whole 2 hours last year. So these are the 1 contract numbers for the months, all of last year. And this year they're lower than that because I'm stopping to train for, like an hour just about every morning. And so I don't put as many trades on. But now that I added the NQ and I added the arrows, I'm going to be doing, those numbers are going to be going back up. So, that like tripled the number of trades. So anyway, this is where you want to be, really, right here. If you quit trading when you get your goal for the day and you were to add 1 contract per month, like I did, this is what I did so far this year. These are based on real things that I did, okay? I had to work 11.71 hours to get my goal so far this year. And I averaged $776 per hour for those 11.71 hours, right? So for those 11.7 hours, 71 hours, I'm up $9,102. Now, I screwed up last month, 5 days. I only had 1 contract on at the start instead of 2. So the per hour rate should be that if I would have had the right number of contracts on, but I didn't. So the real number is this right here. Okay. Now, the next session begins at the top of the hour. This is the way this is going to work now. Okay, we started something a little bit different. The next session begins at noon. All right, to get into that next session, you go here to mytradingiq.com, scroll halfway down the page where it says join our noon session, recap of live training and trade alerts. So what the next session is going to be, and you guys should all go to the next session too, is going to be the longer term stuff. Dwayne's going to cover that starting at noon. He's going to cover the longer term things and go over the Logic 247 alerts that came out last night, concierge trade alerts that came out last night, how they fared over the night and how they are faring so far today. And then I'm going to come back at 12:40 to 12:45, right in that range, and do a recap of everything that I did in here. And then at 1 p.m. Eastern time, I'm going to do another live stream with TradingView. I'll trade from 1 p.m. to 1:30. So you'll be able to come back for that and watch that live stream. To get into that live stream, you go here to TradingView.com. Okay, go to TradingView.com, go to Community, Live Streams, click on that. And down here at the bottom, you see they're all grouped. Go down to Upcoming Streams. Upcoming Streams. And we are going to be right here. Oops. We are not there. Well, I would create a thing in here that is going to look a lot like this, but it's going to say 1 to 130. I thought I did that. I thought I did that for every day this week. Apparently I did not. All right, well, this is for tomorrow. But there'll be another one in here in a few minutes. Okay, that's going to say, go down here and you'll see upcoming streams, 1 to 130. Click on that link, and that'll get you into live stream. Okay, it'll be right in here in this group at the beginning. All right. I can't believe I don't have that. All right. Well, sorry about that. You guys get to laugh at me. Anyway, so spreadsheet. I showed you the spreadsheet. If you want to have access to the spreadsheet, again, just let us know. I'll give you access to the spreadsheet. You can go look at this. This goes back, daily results going back over 10 years. Like this right here is January 2nd of 2013. What were you doing January 2nd of 2013? Oh, I was trading. Looks like I was trading soybeans and the Russell 2000, gold, crude oil, the YM, and the NQ that day. A long, long time ago. And if you haven't taken a trial and you want to, go here to mytradingiq.com. You do it right here. Click on that. Fill out the form. Get in the trial. If you want to take the trial with the TradingView indicators, you got to do this. Do this to take the trial with the TradingView indicators, all right? Click on that, and then you'll be able to get in the room every morning from 9:30 to 11:30 for the next 5 business days, all right? All right, that is it, guys. If you have any questions about the trade rules or the settings, it's all right here. Click on trade rules, watch this video. If you want to have your layout, like this one right here, if I hit save on this right now, it's going to show all the marks that I put on it right now. If you go out there and you click on, not that, you click on this layout right here, it's going to bring up exactly what this layout is that I just saved. Okay. It'll be read only. You'll have to click the copy button and save it as your own if you want to do something with it. But even if you don't have TradingView, I think you'll be able to go out and look at this. Even if you don't have TradingView, I think you'll be able to look at that. Okay, you won't be able to do anything with it, but I think you'll be able to look at it. I'm not sure about that, but I'm actually going to go check that out in a minute and see if that is true. And that's it, guys. With that, I really am going to wrap it up here. And Dwayne's going to have to shut everything off so we can start the next session up in a half an hour. And I will see you guys all in either an hour in meetings. Everybody that I have that asked me for a meeting, I'm going to get in touch with you and we'll schedule a time for today. And if we don't have time today, we'll schedule a time for tomorrow. Dwayne N., you were on the list of people who were supposed to meet with me on Monday, and you weren't there Monday or yesterday. So if you want to do that, you got to let me know. And that's it. That's it, guys.
See you at the top of the hour.
Yes, we'll see you at the top of the hour. See you at the top of the hour, Dwayne. Yeah, it's a new look, Ryan. It's all the same stuff basically, except it's just a lot easier to do, a lot easier to see. And you can see all the arrows here. Yeah, I don't put those on anymore. All right, that's it. With that, I'm going to wrap it up, and I'll catch you guys all later.